Hey folks, Dan Frio here with your market update for November 18th, 2024. So mortgage rates, they ticked up a little bit, but we went over this on Friday's close. That's where there's nothing there. So let's get over to what we're expecting for this week. Here's the economic calendar that we're seeing for the week, and it's kind of, there's nothing there as well. It's kind of going to be one of those weeks where something just might crawl out of the woodworks to upset the markets. But right now, based on this data, not looking like there's anything really here this week that should upset the markets. Right through here, building permits coming out tomorrow. Then on Thursday, we have initial jobless claims, so some jobs numbers. But other than that, there's really nothing there this week. So one article I just came about on yesterday was right through here. It was an interesting article I want to share with you guys. And I'm not going to go over it. I'm not going to read through it, but it's just kind of giving you the reasons why a lot of Gen Zs and millennials, and I don't really know what 18 to 34-year-olds are called these days, but why they're staying at home with mom and dad much longer. Cost of tuition, cost of basically everything, and cost of housing keeps going up. And we did have a report coming out. It came out earlier today. It says the inventory housing inventory, there's no real improvement there as well. So I don't have much good news for you guys today. Like I said, there's nothing on the economic front. If we go over to the MBS market right here, we have the MBS market at down 9 ticks. What does that mean? Well, for those that don't really understand what we watch here on this, what we watch on this channel, we don't watch the 10-year Treasury. We don't watch the federal funds rate when it comes to figuring out what mortgage rates are going to do. So that gives us kind of the path or direction. But right through here, the MBS market, it's a mortgage bond that trades on Wall Street. This bond right here makes up your interest rate on your mortgages. So that's what we follow. So when you're down 8 ticks, which you're seeing right here up on the screen, that basically is saying the markets are flat. We need 10 or more basically to make any changes in rates. So this is where we have rates right now. The 30-year fix is at 7.05. So rates are expected to stay steady today. But there was an interesting conversation here with a young man. He used to be the Fed president of New York. So we're trying to get a bead on what the Federal Reserve is going to do at the next meeting, because the data here doesn't give us enough information. So let's see what this guy has to say. Then we're going to jump in. There are some analysts coming out right now like this saying that the Fed's not going to do anything in December. They're going to pause. And then we're going to go over to the CME Fed Watch tool here in a second. So let's get over to this interesting interview right here from former Fed official of New York. Let's see what his take is on the market this week. So let's get to it.
Joining us now, Bill Dudley, former New York Fed president. We also, Mr. Former President Bill, we also had Austin Goolsbee on last week talking about core inflation being around 2.8%. Does it make sense to you?
So what came out last week, this was kind of a little confusing. A lot of the inflation numbers came in a little bit higher than expected on Friday, and the markets just like waved it off like nothing. And I'm like, well, this is a big to do, because if we don't hit the inflation number by 0.01 or 0.1, kind of the markets go crazy. And Friday we didn't hit it. So it's like, okay, inflation might be ticking its rear ugly head back up again, but the Federal Reserve is doing what? So that's what we're trying to figure out in today's video. So let's get to it.
To you, with the 10-year ticking higher, does it make sense at this point to continue cutting, or does that mean we're just moving the goalposts on inflation?
So I think Powell's view is that inflation is going to continue to come down, but it's going to take a little while to be fully realized. He talked about the fact that shelter costs are still going up pretty rapidly, but that's a lagged response to the fact that it takes time for rent prices to reprice lower. And he's also concerned that the labor market is, not that strong. So
one of the things when he said the housing took a tick up, housing in the inflation numbers make up 40% of it. So when you start looking at the shelter figures in the PCE and the CPI, those are inflation numbers that the Federal Reserve monitors. Housing makes up 40%. So it's been cooling down over the last year, but you notice how he said it has a lagging effect. Even the Federal Chair Powell came out and said the housing inflation is coming down dramatically. Goolsbee said the same thing, but it just hasn't caught up to us yet. And when it does, they're expected those numbers to put us below 2% when those hit. So they're trying to figure out what are we doing until then, until the housing number really starts to come down the lagging effect kind of goes away. So let's get back to it.
View is that the policy is still restrictive. The labor market is still vulnerable to weakness. And so heading in the direction of neutral is still the right course. I think the data, though, is obviously causing problems for them because the economy has been persistently stronger than expected and inflation has been stickier than expected. So the big debate in the market now is does the Fed cut in December? The market basically says yes, but not definitively. And then their view is that maybe the Fed will take a pause after that to wait for more information.
Bill, that dual mandate is a total pain, is it not? I mean, really, when you try and...
Okay, so there's two things on the, well, one's on the screen. This is the PCE. Now, the PCE is the inflation figure that the Federal Reserve puts the most weight in. Okay, so that's that. And then they started talking about the jobs numbers when I interrupted. But this is why we focus in on, or they're focusing in on the PCE, the core, because core takes out food and energy, the fluctuation there. And this is where the number's been. March, April, May, it was 2.6. June 2.6, July 2.6, August 2.7, September 2.6. So it's being sticky right there, but let's see what he has to say to continue this conversation.
The parts of each side seem mutually exclusive. It's not an easy job for anyone to try to navigate.
Well, you're trying to get to the tightest labor market you can without having an inflation problem. So you're sort of balancing these two objectives.
It seems really difficult. What does it, the move higher in yields on the 10-year, what do you attribute that to, since that jumbo cut of 50 basis points and the election? A little bit of both. There's still some residual inflation fear, and also I don't know, maybe some trepidation on what a Trump presidency means for the deficit.
Yeah, I think the big driver is the fact that the economy is stronger than expected. And so people think the Fed's not going to cut rates as far as they thought before. If you go back a few months ago, the markets were priced for the federal funds rate to fall to around 2.9%. Currently, the trough in the federal funds rate looking at it in 2026 is 3.8%. So higher level of short rates translate directly to a higher level of 10-year Treasury note yields. But I do think the fiscal is an issue. And the fact that some of the Trump proposals on tariffs and deportations could also be not only disruptive to the economy, but could push up inflation is probably also weighing on the market. If you look at what's happened, it's partly real rates have gone up, but it's also partly inflation expectations. So the market is, I think, rethinking about the idea that the Trump policies are going to be conducive to low inflation. And I think the tariffs are the biggest risk there. If you raise tariffs by 10% across the board, 60% for China, that's going to definitely drive import prices. And the increase is going to be a lot larger than it was last time, because the tariffs increases during the first Trump term were very modest. They went from about 1.5% of imports to 3% of imports. Now we're talking about something like 3% of imports to 15% of imports, or 20% of imports, much bigger magnitude of increase.
And I just wonder, any comments on the relationship between the president-elect and the Fed chair? I mean, you appointed him. Do you think it's going to be smooth sailing? And can I throw your hat into the Treasury Secretary ring? Do you want me to do that, or no interest?
I think they have no interest. So
what they're talking about is Federal Chairman Powell. His term is due up, I think, in 2026, and him and Trump don't have a very good relationship. Even though Trump appointed him, they kind of split, kind of broke up a little bit along the way. So now they're thinking, when Trump gets into office, is he going to kind of try to remove Federal Chairman Powell? But he doesn't have the authority. That's what they're talking about.
That's cold.
I would say that the Powell is basically trying to keep his head down. He was very definitive at the press conferences. No, I'm not going to leave my post early. Plan to serve up my term as chair to May of 2026. And two, Trump doesn't have the legal authority to kick me out sooner. So he started trying to put that to rest. And then once we get to early 2026, we'll probably see a new Fed chair, and the speculation will start about who that is and how friendly will they be to the Trump administration. There's a reason why we want the Fed to be independent, though, because it's been shown pretty clearly around the world that a more independent central bank leads to better outcomes on inflation and employment. Right. If you don't have an independent central bank, then the monetary policy gets whipsawed based on the election cycle, and that usually doesn't lead to good outcomes.
So that was the take. So let's get over to the CME Fed Watch tool. He was kind of insinuating this. Remember I think it was about 2 months ago, they came in and said there's going to be 10 rate cuts between now and the end of next year. Well, it's kind of petered out a little bit. So here's what we're looking at right through here. You can go to the Chicago or CME Fed Watch tool, go down through here. I always hit aggregate to tell us what's expected over the next year. So what this is telling us is the meeting dates. That'll go down along the side here. And then over the top section through here, this is what the proposed federal funds rate is going to be. So right now it's 4.5 to 4.75. They're saying it's going to be a 62% chance they'll cut it down to 4.25 to 4.5, but there's a 37% chance here, but there's a 92% chance in January. So now people are saying, are they going to kick the can? This person right through here basically came in and said Nomura expects Fed to pause rate cuts in December. So that's kind of looking like it might be increasing the census there, that there might not be a rate cut in December. So only time's going to tell. So that's a report for today so far. Let's get over to the CNBC to see what the broader markets are doing right now. So we have right through here, the Dow Jones is down 12, S&P up 24. Oh, the NASDAQ starting to take off a little bit. We're finally seeing triple digits there in the NASDAQ. It's up 22. VIX is coming down. It was at 16. Now it's dropping down to 15. This tells us the anxiety level of the markets, so that's good. Let's get over to cryptocurrency. It's on a tear again, 91,44444. So we're going to talk about these on Stock Talk Tuesdays, but Bitcoin is now at 91,000. Let's see what oil is doing behind the scenes. It's up 1.89 ticks to 68, but we're still below $70 a barrel. So we're okay there. So that's what we're focusing in on today, guys. So this is saying the markets are basically calm right now because there's really no data out there to put any meat on the bone. So that's what our report is so far today. What do I expect the rest of the day to be? Basically as flat as a pancake. You're seeing right through here. MBSs are down 4. They're teetering between maybe up and down 5 and 6 and up and down 5 and 6. So pretty tight range there. So really not expecting anything for today. So my name is Dan Frio. I'm actually just an average mortgage guy out here trying to win your business. The unique thing about me is I work at a company that I'm federally licensed. So I'm licensed in all 50 states as well as Puerto Rico. So if you're out there trying to buy that first house, maybe looking to refinance, maybe here's what a lot of people are doing right now. They're pulling equity out of their current home and buying another house. Their rate's so low on the first, they're like, I'm just going to cash flow this thing and rent it. So if that's what I can walk you step by step on how to do that. So check out therateupdate.com. Here's my website. If you're looking to buy that first house, make sure you check out the grant finders right through here. But if you want to get the ball rolling, just hit the apply now button, or you're going to scroll down to the bottom. If you want to call us, this is a way you can call in and ask any questions that you have right on the phone. You can give us a call at 844-775-5626, or you can reach me personally at dan@therateupdate.com, and I will be the one answering. Thanks so much for watching, guys. God bless. Have a fantastic day, and I'll see you back here at the closing bell. See you soon. Bye-bye.